All right, let's get on to part two of my favorite chart patterns. This is going to focus on swing trading. Unlike the first one was out there, and Ed, I'm still rendering the prior one, so I'll get you the copy when they're both available. All right, get started here. You're going to see a lot of things that are very, very similar from one presentation to the next. That's because these are my go-to only chart patterns that I think we need to really know. There's the J hook and its companion opposite inverted, hammer hanging man, inverted hammer shooting star, Morningstar evening star, Dojis, some consolidations to pop out of the box or drop out of the box, or I call it poop out of the box, and bullish and bearish engulfing. The rest of them are just not all that important to me because this is enough. I can see what's going on and trade off of them. All right, here's our zigzag J hook. Again, just like we said before, strong move up followed by a pullback. Look for candles that show a possible change in direction and buy on a sign of strength with a very tight stop. Well, here's the strong move up. Let's get some crayons here. All right, there's a strong move up. Then we get a pullback. And we get ourselves a doji and indecisions near dojis here. And then we get a start and move up. This green area here would be my buy area. My stop area would be 1 to 2 candles below. Once I get to moving up into, say, the middle part of this area, I'm definitely moving my stop up to at least during the day. I'm going to move it to the low of the day or just below. And then once we close and we open the next day and start to go higher, this right here is my first target. Now, whether I took it on the first day or took it on the second day, doesn't really matter. But once I take that one, I'll probably move my stop up to break even plus. And now all I have to do is trail my stop up. And by the end of that last candle day, my trailing stop is either below, whether I want to give it a lot of room or a little more room. If I want to give it a lot of room, it's going to be 1 to 2 candles, so somewhere in this area. Okay, let's get rid of that. Let's go back over here to the box. So I could have a stop down here. I could have a stop where it's drawn. Or if I'm feeling really antsy, I've got a lot of profit, I don't want to let it go. Maybe the distance from the top to the bottom here is too much. I can move it up to a third or even a halfway into that candle. What I'm going to do, if this is a daily chart, is I'm going to drill down to an hourly, 2-hour, 4-hour chart and find out if there's a support level. And I'll set it below the support level there. I'm not trying to extract 100% of everything and maximize my gains. Because if I try to maximize the gains, what I'm probably going to do is I'm going to give stuff back. That's just what happens. All right. Here's an example. Nice move up. Let's get our crayons. Nice strong move up. Pull back. You can see that I have the quad lines from TC 2000 here. Poor boy's cheating Fibonacci's. Looking at a 50% level and dropped almost right down on top of it. It dropped right on top of the volatility dots as well, then started moving higher. An entry point could be somewhere along in here going through this level here. And we jumped the creek and then kept right on going here at about a 30 to 45 degree angle. So a lot of people will say, well, wait a minute, this I can't buy this gap. If that gap up, it's too much. I'd make the case that not always. Yes, I hear what you're saying, but one of the things we need to take into consideration is, what about the percentage of the float that's short? If for some reason this gap, let's say that this one was right here, was on earnings day, and we had a reasonable short percentage, I would say that this has a very high probability of continuing that 30 to 45 degree climb. You'll have to see my trading earnings presentation for more on that. We'll get to that over the next couple of weeks. Here's HCC, did basically the same pattern. And notice how it went higher. Here's an intraday chart, 15-minute chart. Stochastics RSI, notice the balance of power is really good. And stochastics pulled back to the bottom. As we pulled back to the opening 15-minute candle, and it started our gradual climb higher. This is a J-hook. Notice my strong move up, and notice I filled in the blank here. That was because that was a gap up on earnings. So this is the move up, and there's the pullback, and based on my eyeballs here, that's probably only about a 25% pullback. Watch for the move higher. It was kind of having trouble in this 1 to 2 o'clock period, but it picked up around 2 o'clock. Now, one thing you can do, if you're worried about these and you want to do an entry, two things are going to happen. One, you can enter near the end of the day to see it's going to hold up. Two, you can drill down to lower time frames, 1 hour, 2 hour, 4 hour charts. And one is to wait for the next day. You had an indecisive doji. But as soon as we got on that third day, this is basically a continuation pattern. And that's what I'm seeing here. This entire area right in there is a continuation pattern. Smart move up. You got to fill in the blank here. Doji and smart move up. We'll go get to that in a bit. Here's your inverted J hook. The inverted J hook is strong move down followed by a bounce. It's exactly the opposite of the regular J hook. Look for candles that show a possible change of direction. Things like dojis, hammers, and the like. Well, what do we see there? We saw that the drop down was, we said, it's getting a little long in the tooth on this drop, as we saw some indecisive candles here, got here, and we had a doji. And what I love is this 3 candle pattern right there. Up, sideways, reversal. All right. Sell on a sign of weakness with a tight stop. Where would we sell? Sell on the breakdown here. Our stop, if you really want to be really wide, lots of people will put it up here. If I get in there and it started going lower, I'm going to set my stop to a little bit above where the high of the day was. If it goes all the way back up to high day, I'm out. It's obviously not going the way I expected it to go, and I'm out. I can always get back in. Here's an example on a daily chart. The Qs. We had a trend change back over here. It looked like we were going to try to hold this 168.5 level. It failed. We did a reversion of the mean bounce and then a continuation down to the target level. The ideal short was once it proved it wanted to go lower, after we had the reversion of the mean, was to go short at this 167.25 level and let it drop to the target of 165.75. It got a little on the other side of it, but it's good. Actually, it was intraday. 5-minute chart. Now, I will apologize that I'm having some sort of issue with my, wow. Okay. I'm having some sort of issue with my Jing copying, it changes my white background to gray. Can you see that reasonably well, even though it's grayed out? I gotta find out what happened. That only just happened today, so maybe I need to reset the system here. But anyway, it had a sharp move down. This on a daily chart, shack. We've been talking about this a while. And it had a move back up, reverse to the mean, a little bit higher than one would really want, ideally, but up at the $98 level, and then a sharp move lower. Now again, this is back at the end of end of September, first part of October, so it isn't today. But you can see how we have that J-hook pattern. Here's overstock with a bear flag or inverted J-hook. Now, when does a J-hook become a flag? Probably if it continues a little bit longer than, say, 3 or 4 candles, but they're basically the same pattern. You can, so you can see once we broke this trend line here and broke price level of about $19, it was going to the prior lows. I think I drew this green line because there were some further support levels off to the left. So that was the target. All right, here we go with hammer and hanging man. Love the hammer but it's got to be at the bottom of the downtrend. So many times I've seen people say, well, I got in because it had a hammer and went higher. Well, yeah, but was it at the end of a downtrend? You have to take all of these patterns in context. This is more than a 3-candle pattern. You could get fooled with a 3-candle pattern if it was going nowhere and did a hammer, or maybe in fact if it was actually going up. If it's either going sideways here or going up, and then you got this 3-candle pattern. Is that kind of a J-hook on a lower time frame? Maybe. But do you really want to play that? This becomes more important if you have a solid downtrend before or uptrend before. The stronger the uptrend, the more influential or predictive that becomes. Hanging man's at the top of an uptrend. Confirmation. Okay, buy on a sign of strength, sell on a sign of weakness. It's pretty simple. Where do you buy? Where do you sell? Aggressive trader will buy right above the hammer, or a less aggressive trader will make it get above this 3-candle pattern. If you do that, then you could probably talk yourself into waiting around here. What happens when you talk yourself into waiting and waiting? Where's your stop? Uh-oh. The reason I like to use this one is because my stop is below the body. And once it moves up, it's going in my favor. It's a tighter stop. Yes, I might have a chance of being shaken out. Yes, I might have the probability or possibility that this is a one-day event and it rolls over. But my thing is that I need to minimize the distance between my entry and my technically supportable stop level. All right, right here and right here is a lot more than right there to right there. All right. All about reward to risk for me. Here's the hammer. At the end of a downtrend, it wasn't a significant amount of money. It was only a couple, $3, 3 or 4 days. But in fact, it was a noticeable, discernible trend. And then entry. My entry would have been right here, assuming I wanted to go long. Maybe not. But you're below the volatility dots. You've got red. If you're a believer that this is a J hook in the making, then you can go long here. Maybe if you went to a 2-day chart, 3-day chart, 5-day chart, it might look a little bit different. All right. Here we go with the hanging man. Strong move up to 147 plus, and then on a heavy volume, people were exiting. Need to have 3 candles to make the pattern. In fact, it's more than 3 candles. It's actually these candles up plus the hanging man and then the confirmation follow through. So it's 1, 2, 3. All right. Kind of along those same lines, inverted hammer and shooting star. The inverted hammer is at the end of a downtrend. The shooting star is at the end of an uptrend. And the confirmation, give a confirmation there, you would buy on a sign of strength and sell on a sign of weakness. Well, that's easily said than, Steve. But show me what you really do here. Well, like I said, you've got to have a good solid trend, up or down, for these to take real effect. And what this shows is that buyers were willing to step up all the way up to here. They didn't close that way. They didn't necessarily win the battle on that day, but they showed that they were willing to take it up. So this is actually a bullish candle. In fact, a lot of people misinterpret that as a bearish candle. All right. And once we start trading up, you have the same problem we had with the hammer. Do you get in quickly with a stop close, or do you wait for a move up here with a stop further away? It's your call. Either way could be right. I tend to be more aggressive if this was after a pullback here. This inverted hammer in the middle of a J hook would be pretty smart. Okay. And pretty much opposite on the shooting star over here. This is warning. We went all the way up here, but we couldn't hold it. It shows that the rally is getting a little late, little old, long in the tooth. ETP pullback. Now it's at the end of a full pullback. Is this where the ideal situation is to purchase? In my case, this is not, because we've been in a solid downtrend. We're below all the major moving averages, and what I'm going to want to do is I'm going to want to see it establish a higher low. Right now, it's established a low. It went through this level in here, so it's established a higher high. Now I need a higher low, and then now for a higher high. Again, looking like a J hook right in here, and that's where I would consider going long. I definitely don't like trying to bottom fish. I am not trying to say that this overall pattern is all I'm focusing on. Is this right in here. Downtrend. Show you example of the hammer and the reversal. This was the actual reversal, but it's not necessarily the ideal place to get in. INAP, not a traditional shooting star pattern. It has this doji in the middle. I basically, if I see that, I say, I ignore it. What is showing more indecision, so I basically eliminate that. So I watch the move up here, shooting star, and what you could do is look across to see that it's going lower. Now, it's fighting it. This is definitely not what I would consider a sell signal to go short. There's a difference between a buy signal to go long, a buy signal to cover a short, a sell signal to go short, and a sell signal to sell what you already own. You need to know the differences. In this case, this is not a short, but it's exit stage left, at least partially, if you're long. Whereas the others, if you're short here, you need to cover. It's probably going to go up. And that's the reason I wanted to show you these, is that I'm not looking at just entries. I'm looking at entries or exits. Morningstar, Evening Star. Very, very important pattern to know and to look for. Morningstar at the bottom of the trend, Evening Star at the top of the trend, buy or sell side weakness. Steve, you're getting very repetitive here. Yes, because these are only just patterns that work. They're important patterns and they work. Where do you buy? Again, you could either buy right at the top of that doji there, sell just below the doji there, or you could wait for further confirmation. The problem with waiting for further confirmation is you either give more money back if you were long and waiting to sell over here, or you could have a stop that's further away in your Morningstar. Or if you're doing a cover, do I really want to let it go all the way back and give up profits that I had on paper but not necessarily in the bank yet? One of the things you could do on any of these, if you're short, cover half, cover a part of it, 2/3 of it, 3/4 of it. If you're long, as soon as it comes up here and does that doji and then starts to come back, sell some. That way you lock in some profit either way. Transocean Rig did a very, very nice pullback. That's kind of a doji-ish type pattern in the middle of a J-hook with stochastics RSI near the bottom. All lining up. ABG, strong move up, doji, reversal, stochastics now rolling over. Piece of cake. All right, we saw some doji, so let's talk about them. The doji can be, it shows only indecision, but it's very important when you consider it in context of the trend. Now, a lot of times you'll see a doji continuation of these 1, 2, 3 patterns, either one of these two, after an earnings report. Now, I could flip these over and make this a down candle, a doji, and then a continuation down, if down is the opposite side here. But, oh yes, it's being recorded. And it will be posted. I love these, especially after earnings reports. This move up right here, followed by the doji, followed by a strong move up, I want to enter above the high of either 1 or 2. If I have a big wick over here on 2, I'll probably enter above the highs of the body. Where's the stop? In this case, because it didn't get as low as day 2, I'm going to be under the low of day 3. Well, why not here over here, Steve? They're a low 2. Because do I need to let it go all the way back down to that level before it proves to me that it's not working? That this candle brought me in, got above this level. If it then reverses and goes back down, I don't need to let it go all the way down to here to prove that it's not doing what I expected it to do. Now, let's do somewhat similar over here where we're doing Strong move up. And this is an indecisive candle. I'll call it a doji, and some people will argue with me and say, no, that's not a doji. Well, not from a traditional sense, it's not. But the effect is it's a doji. It's indecision. It's not moved very far considering how far it ran the prior day. Again, want to go long above the high of the first two candles, but right in here, I'm going to go with a stop below the lowest of bar 2, bar 3. I didn't apply that over here because it recovered, but I need to honor this because it closed at the low of the day on the second candle. All right. And dojis can tell us when we're going to do a reversal of trend, up and down. You can see those all over the place. And let's get some examples. Now, this is a continuation pattern, and I showed you a 1, 2, 3 pattern. Well, this is a 1, 2, 3, 4, 5 pattern. Well, it's not the same, Steve. Well, no, but if you went to a 2-day chart, it would be. And a 2-day chart, these two would be together. These two would be together. And this one plus its brother would be together. You've got to be able to see the context. This is not, it's not like mathematics or physics where, 1 and 1 equals 2. Well, sometimes 1 and 1 equals 11. So we really have to see the pattern and see what's going on and trying to interpret what price is doing, what buyers and sellers are doing in the market. And you can see right there that we've got sellers above. Let me show you where that is. Right in here, we've got sellers above, somewhere around the $26 level. Somebody, probably a big seller, is saying, you know what, I'm going to take my profit at 26. But the opposite side is the buyers are stepping up. 25 something, 25 something, 25.50. What we've got forming here also. Again, and this really works out fantastically when you see both together. Now, let me see if I can get that flatter. All right, let's just say that that's a straight line. And if I draw a line, what I've got is a rising wedge, if this is level. With a rising wedge, I'm expecting the breakout to be up. On the opposite side, if I see a declining wedge, descending, I'm expecting the breakout to be to the downside. And that's what you're going to see right here. We have to be able to see patterns and recognize them without having to stare at them for hours on end. They have to jump out at you. And the only reason that these patterns jump out to me is that, one, I've done a lot of study. Number two, I've narrowed it down from those dozens or hundreds of patterns to the ones that really matter and work for me. So I've narrowed it down to what? Maybe 6 with a bull and bear case of each. That's pretty simple. All right, let's go to the next one. There we go on a 2-day chart. This is GPS on that 2-day chart, and I drew it. And there we go, 1, 2, 3 pattern. You could wait until that third 2-day candle shows up and go long then. And you get your 30 to 45 degree runner. Now, it goes from about $26 to about $29, $30, something like that. I'll take it, especially if you had an option trade. All right, here's rig. Pull back, move up. What I'm trying to do is show the doji reversal there. Again, Doji in the middle of a J hook. Doji in the middle of that Asbury Automotive move up, showing indecision. Then it shows its hand the next day when it goes down. Here's the consolidation pop out of the box. The bulls are winning the battle because the lower lows are gradually creeping higher. We're getting that resistance here, but that's probably a big seller right on top. Or it could be a buyer out there trying to hold the price down. It could be either one. I don't care. The exact if it's somebody trying to hold the price down to be able to get in, as soon as they've reached their 500,000 shares or whatever they wanted to accumulate, they stop selling, and you get the breakout. And rising wedge. And there it is. And I can almost guarantee you that somebody in there was trying to accumulate some GM. Look at the balance of power here. Now, it doesn't always work this way. You have to wait for confirmation. And confirmation, it broke out on what? Now, this is on a daily chart. And in the prior video, in the day trade, I said it's got to move sharply and smartly in your direction, right? Guess what happened? Price moved sharply on volume on the breakout day. Makes you feel a little bit better about going long there. All right, here's go-go, bullish continuation. 3 candle pattern, what I'm talking about. This is the money pattern. Now, it had already gone up, and some people say, well, it's already gone up too high. Well, buy high, sell higher. I don't care as long as it works for me. Now, you've got basically a kind of a continuation pattern back here as well. Again, that's at the end of the day of November 6th. This is an intraday chart of 5 minutes. So, potentially, if I wanted to fill it in, this is what that candle looked like. That is what the candle looked like. 1, 2, 3 continuation. I don't advocate everybody trading on a 5-minute chart. I don't advocate people jumping in the first 5 minutes. But this one showed that in the first 5 minutes, people wanted to buy go-go. Okay. Get 5 minute on the SPY, drop out of the box. We gapped up. We pulled back to the 50-period moving average, and then it gave up the ghost. It did try to hold it right on top of this level over here, about 272-ish. And it finally gave up the ghost. And what happened? Smart moved down. Oh, wait a minute. We have a 1, 2, 3 candle pattern here, too. Oh, my goodness. On this one, we have a poop out of the box. And we have ourselves a 1, 2, 3 continuation pattern. Amazing. They're everywhere. These patterns are everywhere. Just have to learn to see them, know what to do. And this is almost like in the military and aviation when we were learning, we would chair fly. We would be on the ground and you'd say, hey, what if I ran into this situation? What should I do? You know, you do it when you're first learning. You look at emergency procedures and things like that. Once you're in the operational unit, you're trying to find out what, maybe an air-to-air, air-to-ground stuff. You learn from each other by saying, well, how did you do this and how do you do that? I mean, do you add more speed? Do you, what do you physically do with the airplane, or what are you thinking about? It's more obvious when you're talking about air-to-air. It's better to make a decision and do something than to be indecisive and do nothing and die. Because if you do something and it's unexpected or wrong, that could surprise the enemy as well, and you live to tell about it. So the whole idea is you do put yourself in the situations, go back and study, find out what works on average. We're not talking about all the time because nothing works all the time. But find that works most of the time, and if those odds are 66% to 75%, go with it and expect that you're going to have some failures. All right, bullish and bearish engulf. They used to be my number one pattern to look for. Less so anymore. But what I love to do is combine these with the old J hook. So the J hook right here, if this was a pullback and then a move back up, let's do this. Let's just say that was a move up, that was a move down, and you get this pattern right here. Kaboom, go long. These in context with other patterns. You got to look at the big picture. So what we've focused on most of these is very closely in to 1 to 3 candlesticks. But we almost have to back ourselves off and say, yes, I see those 1 to 3 candlesticks, but what is it in the overall context? And if you don't have the overall context, these don't necessarily work. More than a day, I guess. All right, there's a bullish. Am I killing you, Brian? Okay, the bullish engulf at the end of a pullback, is this a reason to go long? Maybe not, because we still have a downtrend. But what this would do is it would get my attention to put this on a watch list. Yeah, I knew what it was. I was teasing you there, Brian. All right, I would put this on a watch list because it's shown me that somebody is interested in this at this price. $18 is low enough to go. Now, I could do, if I'm really, really short term, I could do a counter trend trade to the long side. But until I can make higher highs and higher lows, I found that doesn't really work. So now we're talking about, yes, this is a bullish engulf, but the overall context is not necessarily one to go long. Now, if I were short SEM, this would tell me I need to cover. So I'm not always looking at, like I said before, I'm not always looking at going long. Sometimes it's covering my shorts. I'm not always looking to go short. Sometimes it's covering my longs. ICHR, nice J hook. Couple of indecisive candles here. A true Doji followed by a Doji-ish candle, if you will. This is a shooting star. Oh, wait a minute. Inverted hammer. Oh, no, wait a minute. What's into the context? Well, it meant that this showed me that people were willing to pay up, and it just closed back. This is a bullish candle to me, especially with this stochastic RSI rising. Now, could this have been jumping the creek because this was earnings the next day? Possibly. If that was on earnings, there's no way we could have gotten in. All right? But if this were not, you could have gone long on this day or at the end of the day or on the opening of the following day. With this, I'll say it jumped the creek being the 2850 level. It won't take you very long if you drill down into a intraday candle to realize this is breaking out. Now, what happens if it has high short interest or relatively high short interest? 10% or greater of the float. Doesn't take me long to say, you know what? What if I were short this stock? Where would I put, how high would it have to get before I said, you know what? This isn't working. Probably around 2850 or a little bit higher. Guess what happens? That's fuel to the fire. Because another thing's going to happen. They're going to be, not only are people trying to cover their shorts, but people that have never had an position here goes, whoa, this thing's jumped up above its prior swing. Go long. Whoa, this is an all-time high. Go long. You can see how they all start piling up. and the shorts can get a short covering rally or a short killer. Here's the bearish engulf on Disney back a couple years ago. Down move followed by a reversion to the mean. Where did it come back to? Came back to the bottom of this little drop out of the box pattern, and it basically said, you know what? That's enough. This gave us an indication with this doji and this bearish engulf that at least in the near term, buyers are not able to be in control, that the sellers are taking control. It took a couple of days for it to really pan out, but it gave us an indication. What do we do? Do we go short right there? Nah, I wouldn't. Would I put it on my watch list? Would I draw a line here where the volatility dots are and put in an alert so that it tells me when it goes below that line? So if I'm not watching it directly, it reminds me, says, hey Steve, tap you on the shoulder. Hey dude, you told me to let you know if it got below 98. It is. Okay. All right. I probably bored you guys to tears for these last couple, 3 hours here. You guys have any questions on anything I covered in this session or the prior session? Oh wait, let me get a swig of my iced tea here. You want me to talk a little bit about my moving averages? All right, let me bring up. Do you want to know the moving averages I have, or do you want to, hear how I use them? Okay. All right. I tend not to use a 3 exponential moving average because the 3 exponential is pretty fast. And what I'm using moving averages for are to help me visualize the trend. If you remember from the last presentation, I said I use it to visualize the trend. Well, let's go here. All right, this is a good one. Fran. Here's the 8, is in this blue line. Then I got magenta. That's the 17 exponential. Those are both exponential. There's the 34 exponential, and I have it on there because it helps on rounded bottom breakout areas and for the the pinball setup. Normally, I have that one off. Okay? Keep it clean. I will have the 50 and the 200, the solid blue 50, solid red, and then I'll have the 100. So a very, very clean and simple chart. I use black and white just like Doug converted me. I was not an easy convert. I fought it, but after a while, some getting used to, I guess same as Ed, is that it's quite useful. What I found is that those white candles that were green, the green candles gave me a bullish bias. And by taking it away, I don't have a bullish bias. Now, will the dark candles have a bearish bias? You bet. But I'd rather have the bearishness slap me in the face because I'm always looking long. So it'll always say, yeah, but. Hey, Steve, this is a good move up, this is a good move up, but hang on. It's not necessarily all rosy out there, so be careful. But what I use are these exponential moving averages. As long as we're above that, that shows that the trend is up. Now, I also have in TC2000, I have the 8 and the 17. If I want to look and take care out all the candles, don't want to see any of them. I just want to see, this will tell me whether I'm in an established uptrend or not, or a downtrend, or about ready to no trend at all. Well, we were no trend into, I guarantee you this was earnings, and they went over here. We're in an uptrend. How do I use that? I use my moving averages not only to tell me what the trend is, but remember, where do I trade? I trade in the direction of the trend. So I would not be looking for shorts on something like this. And even on this negative candle day, I would not necessarily be looking for a long. A good question, Brian. I'll get there. Is that what I'm looking for is, if I'm long, I may have allowed it to pull back here, but I'm really cognizant of this down move. I may want to exit. Now, I'm going to go one more thing before I come over to you. You see the quadrant lines over here? I'm going to go to the move just before we did that move up, and it pulled back to just about the 50% level, just a little bit more. Okay, and if I did, I could potentially change this to the gap up day, and it's a more, but it's basically from that level up to there. And you noticed over time, it wouldn't have been without pain, this actually went back up and retested these highs. It happens an awful lot. That if we get a move up, I will have to look at, let's see here. Let's look at shortsqueeze.com, and let's let Kukla, Fran, and Ollie here. 49% short. Oh man. Now you understand a little bit why these guys are rallying so hard from 5 to 20. Holy smokes. These people had piled in so much. And that also on the opposite side says, if I've got 25 to 33% short, don't go shorting. It's already, the shorting is too late. Or it may not be too late. I mean, you could short, assuming you get it, you could short J.C. Penney's or Sears or Kmart, all those that went bankrupt and are about ready to. But go look somewhere else, because the possibility is that it could smack you in the face like this one did. Can you imagine this doubled overnight from 5 to 10? And people say, I can't go long that one. Why not? It's got 50% of the float short. It's got to cover it. It went by $5. Now, it's all based on earnings here, and maybe they said we're going to investigate selling ourselves to somebody else. I don't know. All right, I'll go to your question here, Brian. Why exponential on shorter term? Primarily because I like exponential because it does look at what's happening most recently. It gives more credence to more recent price performance than further back. Why do I use a 50 and 200 and 100 simple? Because that's what other people use. I want to know what other people are looking at. Doesn't mean I'm going to trade it, but I'm going to be aware of what they're looking at. A lot of people use the 50 and the 200 for longer term institutional trading. I also found out that funds on Wall Street will use the 100. So I put that up and put it in dashes. And where we found in the rounded bottom breakout, I did a presentation, I think it was last week, and on the rounded bottom breakout, a lot of times if there's a large difference between the 50, the current price, and the 200, it'll move to the 100, and it'll give me a chance to look back to the left, and a lot of times it will pause or stop at the 100. So I use the 8 and the 17 because they worked. Yeah, if you saw some of them on the 3, they were older charts, and I haven't I'm basically trying to clean up my charts. I do not like to use the 3 anymore. I used to use the 3-8 crossovers for helping me find setups. I know we come back full circle to the 3-8 trap. We were there, 5 to 7 years ago, and we come back to it because we've gone away from it and come back. Well, is that because it's working now, or we just rediscovered that, we got a little bit too fancy here? Let's go something simple. Another thing that we have, and I thank Ed tremendously, is the scanner. So the scanner can come up with those for me. I don't have to have it in TC2000. I don't have to have it on my chart stinking out the place. I'd like to have a clean chart. So the 3, a little bit too fast. Saying a little bit too fast for B is fast. I want the trend, and I want to use the candles. Did that kind of answer your question there, Brian? And Randy, you too. How I use the moving averages. Just to visualize the trend. Put me on the right side of the trade. Do stocks that are an uptrend, you don't try to short them. I don't care. What are the sums that went up? Parabolic. What was that? Was it cone? All right, ARWR. It's had a hell of a run. You want to short this puppy? I say no. It's in a solid uptrend. It's going to pull back, yes. If I'm not long, I'm not. If I was long, I'd probably be taking some profits or selling entirely, waiting for that first sell signal to get out. But I'm definitely not going to short it because it's going to pull back to some level and buyers are going to come back in. And I have no idea where that's going to be exactly. If I shorted this, it would be a counter trend trade. Let's look at the opposite sides. Let's find some. eHealth. It's in a solid downtrend. It's bouncing. But I'm not going to go long. No way. Now, what would make me go think about going long? Higher highs, higher lows. Maybe a crossover of the 8 above the 17. That could be a way to try to find it if you don't have the scanner. 817 cross. Ego. Eldorado Gold. 3-8 still in downtrend. So not ready. Cyrix, no. Some of these we're getting bounces are just not. This one's a tough one, Roku. At what point do you use moving average? Do we count them as strong as support or resistance? Anything above the 50? If I could rephrase what you're saying. Okay. If these. All right. If the stock is moving higher and the 50 is over the 200 and the price is over the 50 and all the shorter term moving averages are above the 50, it's a pretty strong stock at the moment. However, it doesn't mean it's a buy. And when you say as strong as support, I wouldn't use. If it pulled back to the 8 exponential and then started moving higher, would I consider that a buy? No. I don't use moving averages to initiate long or short, buy or sell, or to exit. I use price. I use candles. So the candlesticks will tell me. The moving averages are all lagging. The candlesticks are here and now. They're in real time. Now, ARWR, getting way too extended away from the 8 and the 17. It is, put it on your watch list. Let's come back next week and look at it and see what happens. But at some point, it's going to pull back. At almost no point would it be a logical place with a good reward to risk ratio to short. I don't really care how high it gets. I'm trying to remember there was one stock, and I don't know if it was it Tilray, T-L-R-Y. I knew if I stayed here long enough it would work. That's a daily, yep. Okay, let's go back. Oh boy. All right, there it is. Now, assuming you could actually afford it, assuming you could get the stock to short, Tilray might be the one exception to this, but it was moving. Now it only moves 7% a day, but back then it was moving 10 or 15% a day. I dare anybody to be able to short this puppy, no matter how far away it was from the moving averages. But you knew it was coming back to earth. In fact, this is a famous pattern. Eiffel Tower. They almost always come falling back to earth. Right here. All right, now let's go to the end. Brian had a question. Was yours on ARWR there, Brian? I don't know which stock it was on. Bullish and Gulf on the 50. Okay. Where? You talking about back here? The 16th? Tell me the day. Oh, you're talking about here? 9:30? Okay. Now, how I interpret this is we were in a solid downtrend. Let me go to the EMAs. We're in a solid downtrend. What this said here, this combination three candles, tells me that we are liable. We are likely to have a change in direction, a change in trend. May be coming. So be careful. If you were short, time to probably take profit. If you're thinking about going long, put it on a watch list. Here's the problem. I have a trading buddy of mine in Canada. I've been working on him and with him for 5 years. He is your consummate bottom fisher. He wants to buy cheap. And how's it working for him? Not very well. Because stocks are in a downtrend. He does not make them prove they're worthy of his money before he invests or puts his money into a trade. He would see this pattern at the bottom of a trend there and go long. He would not make it prove that it wants to go higher. In this case, it did, because he sees lots of them that happen that way. But what he doesn't see, his mind forgets the ones that fail. His mind only remembers the ones that succeed. So therefore, he keeps trying to replicate the ones that work. At what point would I consider this a purchase, a long? Not because of the price level, but because on a daily, probably above this candle around 32.35. It's made a higher high, a higher low of sorts, No. Mike, no. They become investments. And he tries to trade fundamentals from with the technical charts and then talks himself into, was it Cummins? The diesel engines? Yeah. Big time problem. I've been trying to help him, but it just doesn't work. They tell you can lead a horse to water, but you can't make him drink. Well, in this case, you can't lead a horse to water and you can't make him drink, but I can sure have a whole lot of fun drowning the son of a bitch. I just keep going back because he's a really nice guy, and I feel sad. Thank God his wife is a world-renowned brain surgeon and can keep replenishing his account. If I go to a 2-day or even a 3-day chart, but a 2-day chart, you can see how this Doji continuation, we had a change of character according to the vol stop. What, back here? But the only problem is, where's the stop? I can see why you might want to go long here, and you did do I did a higher low here with 27.16 on the 2nd of October. Yeah, but what about all this stuff over to the left? Till I can get over the $31 level, I'm probably not considering it. And guess what happened? Come on here. That's 30 and 10. All right, that's 31 that I kind of drew from these lines over here. What do? We broke out above 31, we pulled back to it, and started to go higher. I could probably drill down to a 2-hour chart. Let's make it a 4. Ha ha ha! It pulled back to there. I could make a case going long once it held. It's proven to me right now that it wants to hold 31. It's changed from a downtrend to an uptrend, and it proved that it was holding 31. So if I'm okay with wherever I am at, say 32.5, $1.50, if it goes to there, that's more than a 2-to-1 ratio. Yeah, we should have been going long. Now, I'm on a 4-hour chart. And Rick would say, well, if you came in on a 4-hour chart, you ought to stay there. Well, I got to be able to see the big picture too. And I'd probably go to a 4-hour chart and find out what happened here on the 30th. Yep, untested. Back there, 35.75 was in the cards. So my first target, I know it's easy for me to show that after the fact. Let's go edit 35.50. Okay, and I'm just going to point out one other thing, and then I'm going to hand it back over to Ed. You saw what I just did. I kind of moved over one day at a time. I'm using the left bracket and the right bracket to move. This is another thing that I did when I was early on in trading patterns and stuff like that, is I would say, okay, I'd step it over a day at a time. Would I go long or short? Would I go long or short? What do I see? What do I see? Oh, it got down to 27. Can I go long? I don't think so. And remember my rules. I got to trade in the direction of trend. Now the trend is kind of pointing up, but I got overhead resistance at 31. So I'm going to kind of fast forward and see what it does at 31. It broke out here. My stochastics RSI are near the top. Am I going to wait for a 1 to 3 day move up pullback? Yep. Because I also have this level here around 32. All right, let's see what happens. Oh, it went up another day. Oh, it hit What level? It hit that level. Oh, oh my. Okay. And this magic, I mean, it went to a price level. You ran into sellers. Duh. It did it again, but it did go lower. Stochastic RSI going lower. I would be starting to get more interested. If it gets over 32.15, we ought to be going long, because 35.50 is kind of an ultimate target, but the first target is really 33 or so. I gotta get within about $1 or so for a stop. All right, getting close. That went back down, going back up, going back up. There's the breakout. Do I buy this or not? That's the problem. It broke above 31. I'm not going to say that 32 was my area, but it did wobble. I'm saying I'm going to go long. Now, it's going to be easy because we know where it ended up. But we go long because 31 was our level. It's proven to us once, twice, 3 times a lady. 3 times, or at least twice, it wants to hold 31. So if I can give $1, I got the possibility of making 3.5. And it kind of grinded. Then it starts picking up volume and bop. Now I expect this run into sellers at the bottom, somewhere in this little range right here. That's why we did it. I'll say yesterday's candle, but it's the 14th candle. We ran into a little bit of sellers. The market was also weak that day. Grinding higher, moving up on about a 30-degree plane angle, still grinding higher. Stochastic hasn't rolled over yet. Have I got to take any partial profits yet? I'd say no. I was right, because we did get the rollover. Now, will I take any profits at 35.5? You betcha. Why? Because it hit my target. Am I going to take all of it? No, I'm going to probably try to trail some of it. And then we're here today. Now, on the 4-hour chart, we'll get a little bit of a shooting star kind of thing. We went down to a 2-hour chart. Not bad. 1-hour chart. That looks a little on the toppy side. So if I hadn't taken any profits yet, it's time. All right. Mike, see on there, you can see why you might want to enter just with low, but you got it. Right. Brian, if one is trying to swing trade, can you use a daily, weekly, or is that bad? It all depends. Now, I say it all depends because on a daily chart, that's the norm that most people use for swing trading. I am of the persuasion that you can use lower time frames, like a 30 or 62 or 4-minute chart, 2-hour and 4-hour chart, to swing trade. Nothing below, say, a 30 or a 60. The only reason I mentioned the 30 is sometimes it's easier to see, but go to a 60-minute chart, 1 hour. Because sometimes you could see intermediate levels. But then again, I'm willing to say that if it goes below the support level on the hourly chart, I'm going to be out. And I'm not going to look back. Now, some people say that's too short of a time frame. Okay. Can you use a 2 or 4 hour? We've already proven that in the last couple of months. Can you use a weekly? Now, here's where it all depends. Every time you go up to a higher time frame, you're more than likely going to have to give it more room, hence a wider stop, hence more money at risk. Can you stand the money at risk on a weekly chart? In many cases, if you're in the stock, the answer is no. Okay, so I'm on a daily chart of Walmart. It's been moving up and down quite a bit. If I use, say, something like the 17 exponential, it's better. Now, If I go to a 3-day chart, I take out a bit of the noise. And here lately it's been up. If I go down to your weekly chart, well, if you go to your weekly chart and you went long, well, let's pick out a level. Let's say that I want to pick out a 103.50. Well, where's my stop going to be? Well, my volatility stop says I've got to be below 98, or 99, 98.79. That's probably where it needs to be. Holy smokes. Now I'm talking $5 or $6 back. That's a lot. Percentage terms, 5%. But if you're buying the stock and not the option, it's a lot of money to put in. Okay. If you do a daily chart, so let's do a 3-day. 3-day, it turns out to be around the same level. A long and short are on the same level. Go long, go and stop. Let's do an edit. Let's change that candle color to red, so we know that's a stop. Let's go to a daily. Left bar, left bracket. Now, could I possibly, if I'm trading on the daily chart, go long Walmart at the same level with a tighter stop? Yes. Just look at the daily. Do I need to let it go all the way below $99 to prove that it's not going my direction? No. I could do 100. I could potentially do 101. Because we have technically defensible positions of lows. This stock on this day right here went as low as 101.44. And the buyer stepped up and pushed it near the highs of the day. That tells me that every time we try to go lower, the buyers step in. One of these two levels is probably where you would want to go. The only reason you would, probably in my mind, and this is the way I do it, and that doesn't mean it's right, but it's the way I do it. The only reason I will use weekly charts is on longer term holds, core positions, things like Costco. And then what I do is I use the area chart. I do an area chart with a weekly, and when I get double topping right in here in the last fall, I sold out the last of my Costco and I lost track of it and never got back in. It broke out here at 250 and kept on going. I'll just have to wait the next time. All right, I'm going to have to call it quits. I'm running out of voice right now. I want to thank everybody for being here. I hope you guys learned something, and we'll see you on the flip side. You guys take care.